Well, hello everyone. My name is Shaldy Owen Simbolon. I'm an accounting student from University of North Sumatra, and today I'm gonna explain to you a little about accounting for consignment sales. So let's get started. First of all, we need to know what a consignment sale is. So, consignment sale is a trade agreement in which one party, the consignor, provides goods to another party, the consignee, to sell. However, the consignee has the right to return unsold goods back to the consignor. In other words, a consignment sale is an agreement in which a third party is entrusted with selling goods on behalf of the owner. The characteristic of consignment sales. Consignment goods must be reported as inventory by the consignor because the rights to the goods still remains with the consignee. Consignment shipments do not generate revenue for the consignor and vice versa. The consignee is responsible for all costs associated with consigned goods unless otherwise specified. And the consignor within his limits is obliged to maintain the safety and security of consigned goods he receives. There are several reasons why consignors choose consignment sales. The first one is consignment is a way to further expand marketing. Second is certain risks can be avoided. For example, if the consignee goes bankrupt, the consigned goods are not confiscated, and the retail price of the item is more controllable. Why a consignee accepts the consignment agreement? The consignee avoids the risk of failure to market the goods, and the consignee also avoids the risk of damage to goods or price fluctuation, and the need for working capital can be reduced. There are two methods of recording that can be used by both the consignor and the consignee: separation method and non-separation method. Record written by the consignor. With separation method, all gains or losses on a consignment transaction are recorded separately from the profit and loss on ordinary transaction. To make it separate, the income and expenses associated with consignment transaction must also be separated. The tool used to collect these revenues and expenses is the consignment goods account. This is the debiting and crediting of the consignment goods account. On the debit, we put all the transactions related to consignments, delivery, and cost of consignment sales, such as the cost of shipped goods, shipping costs, costs related to goods paid by the consignee but borne by the consignor. And on the credit, we put all the transactions related to the sale of consignment goods and consignment revenue, like when recording consignment revenue and consignment profit. With non-separation method, all profits or losses arising from a consignment transaction are not recorded separately from the profit and loss for the ordinary transaction. In this case, the consignor keeps a journal when they issue shipping costs, receive a consignment report, and accept money from consignees. Recording written by the consignee. With separation method, all gain or loss on consignment transactions will be presented separately from ordinary transaction profit and loss. To separate them, income and expenses related to consignee activities must also be separated. The tool used to collect these revenues and expenses is the consignee goods account. The debiting and crediting to this account is as we can see on the table. Debit, we put assembly cost and amount payable to the consignor, and on credit, we put purchasing freight cost, selling consigned goods, consignee goods, sending accountability report to the consignor, and sending payments to the consignor. With non-separation method, all profits or losses arising from a consignment transaction are not recorded separately from the profit and loss for the ordinary transaction. Accordingly, revenues and expenses relating to consignment transactions are recorded like income and expenses related to ordinary transaction. To know and differentiate from the goods themselves, every transaction related consignment good will be recorded in this account. On the debit, we put expenditures of expense borne by the consignor and deposited money, and on the credit, we put the cost of goods sold at the time of the sales transaction and any other receipts and profits from consignment sales. Here's a case example. CV Zone made a consignment agreement with Polestar to sell bicycles in exchange for a 10% commissions on sales. All costs are borne by the consignor, and the consignee makes sales report every month. The transactions: CV Jones sent 100 units of bicycles with a basic price of $100 per unit, with a selling price of $200 per unit. CV John paid transportation fee of $200. Postal paid assembly fee of $100 per unit. Postal managed to sell all the bikes, and Postal sent all the cash proceeds from sales. With separation method, we make the goods delivery journal. For the consignor, we put goods sent on consignment, $10,000 on debit, and we put inventory on credit of $10,000. There's no journal entry for the consignee. And in freight cost payment journals, we put freight cost on consignment goods in the amount of $200 on debit, and on the credit we put cash $200. And there's still no journal entry either in this journal. And in assembly cost payment, there is no journal entry for consignor, and for consignee we put consignee goods on debit $100 and cash on credit $100. Sales by postal and sales report sent. For consignee we put cash on debit $20,000, consignee goods on credit $20,000. We also put consignee goods on debit $2,000, consignee revenue on credit $1,000. And we put cash in the amount of $17,900 on debit, and account payable of CV John of $17,900 on credit. For the consignor, we put account receivable of Postal $17,900 on debit, consignee goods on debit $1,000, and assembly cost on debit $100. And on the credit, we put consignee goods sales $20,000. Money proceeds from sales delivery. For consignee, we put account payable of CV John $17,900 on debit, and on the credit we put cash $17,900. And for consignor, we put cash on debit $17,900 and account receivable on credit $17,900. For the closing journal, for the consignor, we put sales revenue on debit $20,000, and we put on the credit we put freight cost $200, consignee goods $1,000, assembly cost $100, consignment goods sent $10,000, and consignment profit $7,700. We also put the consignment profit on debit in the amount of $7,700, and income summary on credit $7,700. For the consignee, we put consignee revenue $2,000 on debit, and on credit we put consignment profit $1,000. We also put the consignment profit on debit $1,000 and income summary on the credit $1,000. And for the settlement of goods that are still remaining, only the sold items are reported by the consignee to the consignor. As long as the consigned goods remain with the consignee, no records need to be made, either by the consignor or the consignee. Freight costs are charged proportionally to the consignment. The consignor must record the cost of goods attached to the unsold consignment goods. Okay, I think that's all I could say on this video. Thank you so much for watching, and please be free to leave a comment and leave a question as well if you have any. Hopefully I can answer it as soon as possible. And once again, thank you. Thanks a lot.